In today's episode, I want to talk about the worst part about being a day trader. Some people might think the worst part is being by yourself all day long or sitting at the computer. No, the worst part, it's the losing. It's the losing of money. That's definitely the worst part. If you tune into my daily recaps, which I upload every day, whether it's a red day or green day, you already know that today for me is a red day. But I want to come on here and talk a little bit about the prescription that I give for myself anytime I have a big loss, which becomes my path to recovery. And this is something that you guys can benefit from, whether you're watching this today, a week from now, 6 weeks from now, months from now, or even years from now. This is the strategy that I use to recover from loss. This is something that's really important. So first, let's talk about the leading causes of failure in trading. Number one is no strategy. A lot of traders come into the market with no strategy whatsoever. So essentially, they're shooting from the hip. They're trying a little of this, a little of that, and maybe they get a little beginner's luck, but more often than not, they lose money. Now, that shouldn't be any of you tuning in to this episode here today. If you've been watching any of my episodes on YouTube, you're already digging in to day trading strategy. So that's a good thing. Now, the second leading cause of failure, traders have a strategy, but they lack the discipline to follow the rules of their strategy. Now, see, that's where I fell victim today. Even after all these years of trading, I still, at times, struggle with this. So what happened to me today? Well, this morning, when I first sat down, I sat down at my trading station as I do any other day, and on, it was maybe my second or my third trade, I took an outsized loss. Now, I wasn't breaking any of the rules of my strategy. I just took a big loss. It is what it is. And I locked up down about $16,000, $17,000 on the day. That was at about 10:30 a.m. I recorded my recap, uploaded it to YouTube just in time for my 11 a.m. meeting. Typically, I have meetings at 11 a.m. So that's when I meet with my team and we go over the software and everything that we're working on and so on and so forth. So I'm in that meeting. I finished the meeting at 12 p.m. and I look at my scanners. And you know what I saw? I saw MLGO, one of the stocks that I had traded this morning, that I had been watching this morning, had squeezed up from about $11 a share all the way to 20, nearly 100%. And I want you to imagine how that made me feel. Anger, frustration, disappointment. I was pretty upset because that could have been my Hail Mary pass. That could have been my get out of jail free card. If I had gotten those trades, who knows? I might have recovered not just some of my loss, I could have recovered the whole loss. And all of a sudden, in an instant, up here, I was hijacked. And all I was thinking about was trying to chip away at more of the loss. The problem for me, if you know my strategy, I have a very specific time of day when I trade the best. And so now at 12 noon, 12:30, 1 o'clock, no, that's not the time of day I make good money. So I suppose you can predict what happened next. I took a couple more trades and I had a couple small winners, just enough to get a taste of what recovery might feel like. And then I had another big loss. And so now today I'm sitting below max loss, even deeper in the red than when I upload my first recap. Now I'll show you the damage in a moment. I know some of you are excited to see it. Don't worry, we'll get to that. But in an effort of keeping this episode relevant for people watching months from now or even years from now, I want to focus more on those moments of mistake, the moment where I kind of went off the path. Now, I upload my recaps every day, and I try to put it all on the table. I had 76 green days in a row. You guys got to see a lot of back-to-back green day recaps, but I got to show you the other side of the coin because trading, well, you're going to have losses. And even traders who've been doing this as long as me make mistakes. So for those tuning in perhaps for the first time, my name's Ross Cameron. I'm a full-time trader. And in 2017, I funded a small account with less than $600. I've now grown that account to over $12.5 million in verified and independently audited trading profits. Now, I don't share that with you because I want you to assume that my results are typical. I'm sharing it with you because I want you to know that, oh, I've been trading for a long time and I do know what I'm doing. But even in spite of having all of that success, during that challenge, I had a few huge red days. Today, well, it actually pales in comparison to some of the big red days I had. But you know, it's kind of funny because I've been trading for a long time. I have a strategy. I have a set of rules that I follow. And when I follow those rules, I make good money. And so that might lead you to think that I would never break those rules because, gosh, I've made all this money. Why would I ever deviate from these rules that produce so much profit? And on the other hand, having been so successful, you can get a sense of confidence that I know how to trade. I know better. I make good decisions. I make good money. And maybe sometimes I deviate from the written rule of the strategy, but I still walk away green. So today, I deviated from the rules of the strategy. I chose not to follow them, and that was dumb. And so now I'm sitting with an outsized loss. So let's take a look at the number because I know some of you are curious. So I'm now sitting down today, $28,930.50. If you recall, at the end of my recap, I said that I was coming to a time of day where my odds of recovering the loss were nearly non-existent, and my odds of doubling the loss were increasing exponentially. Now, I didn't quite double the loss, but I came darn near close. It is discouraging, to say the least. The silver lining is that in those 76 green days in a row, I made about $1.6 million. So losing 28,000 on the first red day, I can handle it. But it doesn't make it feel any better. In fact, not only is it disappointing, it's embarrassing. It is, I'm up here trying to set a great example for you guys. And here I am doing something as dumb as breaking my own rules. And I thought this is exactly why I need to go ahead and record this recap and upload it for you. Because I want you to understand, for those of you guys that are new and are struggling, that this isn't something that you'll just overcome. Sometimes people think, oh, I can't wait till I'm just cured of this disease of overtrading or breaking my own rules. You'll never be entirely cured because the discipline to follow your rules is a muscle. And some days that muscle feels strong. And other days, for whatever reason, well, it's not there when you need it. So if we know the two leading causes of failure, number one is lack of strategy, number two is lack of discipline, I think that it would be appropriate to dedicate this episode to how to be a more disciplined trader and to the specific steps that I take after I've had a big loss like this, so I can get myself back on track as quickly as possible. So the first thing that I would ask myself is, what was the cause of the loss? So if I was sitting here down $28,000, or you came to me and you're down $28,000, I would say, well, what was the cause of the loss? So this morning, those first few trades that I took and the loss that came with it, honestly, there's not a lot I would do differently. That was just the luck of the draw. It was bad luck. I got in a trade that flushed. I'm right about 70% of the time. So, and that's, not just kind of my opinion. We could pull up my metrics here of, let's just look at the last, we'll look at the last 30 days. Sure. Last 30 days, which is not going to include today because it's not imported yet, but averaging about, 67% for the last 30 days. If we go year to date here, we're going to be probably around 70% accuracy, 69.3. So, it's a pretty good shape. We go back to the last 12 months. Last 12 months is going to be a little lower because some of last year I was struggling at the beginning. So about $2.5 million and about 64% accuracy. So all that is to say that even the best traders, even with a strategy that produces $2.5 million over the course of 12 months, may have a day where you're doing everything right, following the rules of the strategy, but you don't produce profits. Maybe the market's not on your side. Maybe it's just bad luck. So if you followed all your rules and you lost, I would ask a couple questions. One, did you suffer from bad luck? Did you lose internet in the middle of a trade? Did you just get caught in an offering of news or something like that, or a big flush? Or is the market shifting where your strategy is not as profitable, or is the current market doesn't cater to your strategy as well as it did in the past? I think in my case today, given that the last few weeks have been a little bit slower, it's sort of a combination of I was a little too aggressive and I got some bad luck. Okay, so that's the luck of the draw. But then the other question I would ask is, okay, if you follow the rules of your strategy, then all right, that's one thing. But was this a human error issue? Was this an issue where you made a mistake? You broke your own rules. You gave in to FOMO, revenge trading. You traded past the time of day when you're supposed to, which yes, in my case, this afternoon. So if that's the case, that's actually in some ways better and in some ways worse. In some ways better because it tells you that the problem is not with your strategy. The strategy is great. The problem is you. So I guess maybe that's worse because that's disappointing. The strategy works, but I can't follow it. What's wrong with me? However, we can solve for this by focusing on the triggers that occurred just prior to you spiraling and learning to recognize them and walk away sooner. And that means in the coming days and weeks, putting yourself into essentially a trading position where you've got really tight guardrails on to help you avoid getting caught by one of those triggers and then having a second spiral event. Now, if the problem was just simply, you followed all the rules of your strategy and you came up short, well, that can also make you feel better because it's like, this is really not personal. This is just the market is not on my side right now, or I just had bad luck. In which case, tomorrow, what would I do differently? Not much. The only thing I would do differently tomorrow, if the only issue was strategy or bad luck, the only thing I would do differently is I would reduce my share size. That way, if the market continues to be difficult for my strategy, I don't incur unnecessary losses. But when the problem is from discipline, that requires not just restricting share size, but also really putting on tight guardrails around yourself to prevent you from having a second red day. So my biggest risk right now is that I come in tomorrow and try to make $28,000 on my first trade. I try to make it all back on that first trade by buying 50,000 shares of something and hoping it goes up 50 cents a share. That would make me 25 grand. And while it's true that that would immediately make me feel, I suppose, like a hero. Think about a quarterback throwing that Hail Mary pass, seconds on the clock, and it's caught, touchdown, and all of a sudden they win. Wow, that's a pretty amazing feeling. I can only imagine. But trading kind of feels that way sometimes because the clock is running down on what we arbitrarily feel is the time given to recover this loss, which is usually 1 day. So I've got to recover this whole loss by 4 p.m. Eastern. So that means 3:59, I'm ready for a Hail Mary pass. I'm going to throw it. You know what? It's already a red day. So what's the difference between being down 16 grand and being down 28 grand? Red is red. Losing the game is losing the game. And that's a flaw in our thinking that a lot of traders suffer from. Because of course now I have to recover the loss that I just took. And it's going to take longer to recover 28,000 than recover 16 grand. If you throw an interception at the end of the game and you already are going to lose, so it doesn't really make that big of a difference. It's embarrassing, but at the end of the day, you start over with a new game next week and it's a fresh game. It's a fresh start. But it's not like that with trading. You have to have sort of that, you have to be able to think forward and realize that my decisions today are going to carry with me tomorrow. So we give ourselves that arbitrary deadline that I need to make back this loss by the end of the day today. I will make back this loss. By the time some of you guys are watching this, I will have probably made hundreds of thousands, even millions of dollars since this red day right here. I've had so many of these red days. I mean, it's just part of trading. I've had more than I could possibly count. In fact, the last big red day I had, I don't even remember the stocks I traded. And so I bet that if you asked me a month from now, what stocks did you trade on that day where you lost 28,000? I probably won't even remember. It'll be water under the bridge. And that's an important level of detachment to have, just to let it go. So what do I need to do tomorrow? Well, I can't come in swinging for a home run and trying to make it all back in one trade. Because if I did that, while the upside would be, making it all back and being back to green, in which case I would no longer feel like a loser and like an idiot, the downside would be 50,000 shares. I lose 50 cents a share. I'm down another 25 grand. Now I'm down 50,000. Uh-oh. That's spiraling. So you guys know the deal. We've talked about this before. So this is where you go into that spiral where the losses get bigger and bigger and bigger. So what's the cause? Emotion. You're sad. That leads to desperation where you're increasing the quantity of trades and you're decreasing your quality threshold. So instead of trading just A quality setups, you're trading B and C quality setups because you really are so desperate, you're just willing to take a trade on anything that's moving. And next thing you know, you're taking more trades, low quality, you're losing more and more money. So how do we break this cycle? Well, certainly one of the ways to break the cycle is to focus on only trading A quality setups. But the second thing that we have to do, and this is really critical, is we have to focus on guardrails. So number one is A plus quality stock and setup. So I'll put a link in the description for my 5 pillars of stock selection that you guys can check out. And in those 5 pillars of stock selection, the stock needs to meet all 5 in order to be A quality. In order to be A quality, it needs to meet all 5 pillars of stock selection. And in terms of setup, I'm going to focus on trading that classic setup where we get the first pop, we get either a micro pullback or a bull flag, maybe a little bottoming tail there, and first candle to make a new high, because that is consistently the setup that I make the most money on. So A quality stocks, A quality setups. But number 2, I need to add some guardrails. Now, I talk about guardrails in this little book right here, How to Day Trade the Plain Truth. So if we go into this book, I talk about in chapter 7, the battle that'll happen between your ears, trading psychology. And later in the book, I outline all of the guardrails that I put in place. Guardrails are kind of like training wheels. It's not the intention that you're going to win the Tour de France with training wheels on, but it's an important tool to help protect you from having additional losses. So what I know is that if I come in tomorrow morning and I lose $5,000 on my first trade, I'm going to be immediately triggered. My emotions are going to be back to right where they were when I was down and locked up that the minus 28,000 right after I took that final trade. I'm going to be right back to there. And I don't want to go right back to there because that could be a place of emotional hijack where immediately I go to start throwing Hail Mary passes. So that means I can't allow myself to take a position size that could create that loss. So unfortunately, I have to, one of the guardrails is size down. And I hate to say it because I don't like doing it, but it's what I have to do. So I've got to size down tomorrow. By sizing down, I will continue to trade, but if I incur a loss on my first trade, which there's a 1 in 7 chance, really 1 in 8 chance that could happen. It could happen. So if I take a loss on that first trade, then at least the loss is small, so I don't get emotionally triggered. I can still focus on being calm, cool, collected. Now, normally my fuse isn't so short, but because I've just had a red day, well, I know it's going to be short because I know my triggers. I have that big emotional response with being red. Now, today was my first red day since November. I haven't had a lot of practice having red days recently, which is a good thing, I suppose. But it's also a bad thing because I haven't had to face the emotion that comes with finishing the day in the red. And so I got stubborn today. And I tried really hard to not be red, including throwing a couple of Hail Mary passes, which obviously didn't land. So, as I sit here today, I'm realizing that tomorrow, being sized down, that may cost me some money. So not only did I lose $28,000 today, I might lose another $10,000 tomorrow, not in losses necessarily, but in lost opportunity because I can't take full size. But that unfortunately is the cost of today's mistake. So number 1, I've got to size down. Number 2, I got to reduce the time that I trade. And reducing the time is important because it's not reasonable to expect that I'm going to be able to maintain the emotional composure and discipline to hold that discipline for a full 5-6 hours of trading. So tomorrow I got to get in, I got to try to get green, and I got to get out. And if it's another red day, which it could be, at least it'll be with smaller share size. So my max position tomorrow, 1/4 of my full size. That's how far down I go. I go to 1/4 of full size. And the goal tomorrow is to have a small green day. Of course, it'll be a quarter size of a decent green day with a quarter size position. But that's all right. A quarter size green day is fine. It'll break, sort of clean the slate. And then the next day I come in, I do the exact same thing. The next day I come in, I do the exact same thing. And in fact, what I do is after a big loss, so, have all this profit and then, oops, all right, have a little bit of a drawdown. So now after this big loss, what I don't want to do is go like that, right? I don't want that second big red day in a row. So guardrails are on, starting right here. So now the guardrails are on. And I'm going to be trading with smaller size. So small green day, good. Small red day, tolerable. Small green day, fine. Small green day, fine. Once I've made back about 50% of the drawdown, the guardrails come off. So now I take the guardrails back off. And then usually by that point, it's been about a week and I'm starting to feel emotionally a lot better. Like I'm like, all right, I'm kind of back in charge here. I know what I'm doing. I'm feeling confident again. And by that point, I'm beginning the next ramp coming back up. So this is the critical time right here. This is the hardest part about trading. And this is the hardest thing to accept. This period where you need to be in essentially what we would call trader rehab. So trader rehab is a program that I developed with we have a trading psychology team here at Warrior Trading. And so we created this program called Trader Rehab. And during Trader Rehab, if you've just experienced a huge loss or you've been on a long extended drawdown, maybe for months or even years, Trader Rehab comes in and you add really tight guardrails. The first thing is you vet, what is the strategy I'm trading? Is the underlying strategy profitable? And the problem is just me. Like I said, in a way, that's your best case scenario because at least you know the strategy is profitable. Because if you've been losing for months or years and it's not a discipline issue, then it's like, wow, I've got to go back to the drawing board. My entire strategy is flawed. But my strategy is not flawed. My flaw today really primarily was a discipline issue. That's a me issue. So even after all these years of experience, it still happens. Okay, fair enough. So now what we've got to do is add these guardrails to help bring the emotions down. And I'm telling you, you're going to resist this. You could say, Ross, I don't want to trade with a quarter-size position. It's stupid. I'm not going to make back this loss trading with a quarter-size position. So you've got the wrong attitude when you think like that because you're still focused on recovering the loss. I can tell you from my own experience that 3 days, 4 days of trading with one quarter-size position with small winners, you will feel like a completely different person than you are right now. Your emotions will come down so much. Because what I've seen a lot of traders do, I can't tell you the number of traders I've seen do this, but I did it myself when I was earlier in my career. They have a big loss. They come in day 2, they take another big loss. They come in day 3, they take another big loss. They come in day 4, they take another big loss. And all of a sudden they're like, holy smokes, I just gave back a year of progress, maybe more. I've seen traders do this. I've seen traders lose millions of dollars. And if they had intervened right here at the very beginning, everything could have been different. So wherever you are in this, little equity curve, you might be down here, maybe you're further down, maybe you're way up here. Maybe you're still in the green. Good for you. You're not in a drawdown right now. It's important to be aware of the intervention moment. So the intervention moment is right after the loss, or as soon as you become aware of what you're doing, develop that insight, and right at that point, put on your guardrails. So what are they? Quarter size, reduce time, and then I'm going to switch pens. A plus quality. So that's going to be as per the 5 pillars of stock selection. I'm just going to rewrite this, reduce size. All right, reduce time. And A quality setups. So we'll just do the chart pattern like that. A quality setups. This is key. So 1, 2, 3 steps right there. If you do that, like I said, if you continue to lose, the losses will be smaller because you're sized down. But typically, you're back to focusing on A quality setups. What's more likely to happen is small green days. You have some small green days. They don't feel very satisfying at first because you're still down so much. But after a few days like that, you realize, all right, man, I've got this. And you know what? I'm still the same trader who did all this. And once you've made back about half the loss, that's when the guardrails come off. Because at that point, even if I have another red day, I'm not worried about going all the way back down to the low at that point. I'm kind of out of the woods. The worst thing you can do is go into this period of stair-stepping down. We do not want to do that. So we got to stop the down and start stair-stepping up as soon as possible. And that means putting the guardrails on. This is part of trading. And this is right here in these moments, the hardest part. So let me show you the trade that really got me today. So it was GDHG, as you can see right here. So GDHG got me good. And on this one, let's see, it's right here, 374. So son of a gun, look at this all the way back up to here. Oh boy, it doesn't matter. I mean, it's not like I would have held. If I had held it all the way down to $1.80, I would have been just Oh my gosh, there's no way I could have. I did the right thing by cutting the loss. So on this one, it squeezed up right here, 340 up to 350. And I took my first trade right in here and I had a small winner. Made about $1,000. I was now down only 16,000 on the day. I was like, all right, here we go. Then it pulls back, pops back up, pulls back. I got back in right here and it hesitated for a second and I stopped out. And then I got back in right here and I added right here. And when it dropped here, I got stubborn. And in fact, when it broke over $4, I added at 413 because I was like, okay, here we go. I was looking for a parabolic move. So I ended up sizing up way too heavy with too high of an average and then flushes back down here to 340 and I lost 12 grand just like that. So now I'm down 28,000. And thank goodness I sold where I did because this thing went a lot further down, dropped all the way down to here. And of course now it's, this sort of recovery back up later. But the fact is, although this had some volume, as you can see, it also had a history of red candles, which I ignored because I was so focused on profit, I was thinking less about risk. This is a classic mistake. So I hope that this also inspires you, just for you to see that even someone who has made over $12.5 million in the market, who's been doing this for more than a decade. I funded my first account in 2001. I've been doing this for a very long time. Even I am not immune to having a bad day. Really, the mark of a successful trader is not just, not having bad days. Bad days happen, but it's about having them as far and sort of few and far between as possible, and having the composure to recover from those losses. So one of our members at Warrior Trading, his name's Jess, he's got his $1.5 million badge. He said, when I did an interview with him, I asked him, what was your turning point? And he said, I didn't really have a turning point. I just started sucking a little bit less. And so I kind of asked more about that. And he said, my red days started to be a little bit more spaced out and they started to be a little less big. I kind of learned some of my triggers and I learned to walk away a little sooner. Now, look, this isn't my worst red day by any means. My worst red day, you ready for it? $275,000 on my birthday, no less. That was a bad day. That was a really bad day. I won't forget it. But I don't remember the ticker that I traded that day. So even the worst day ever, I don't even remember the stock I traded. And it doesn't really matter at this point. So I've had bad days. And I think that in my years, I have gotten better at walking away sooner. And I could have kept going. I chose to walk away here. It's always a choice. And I chose to walk away. I reached my personal max pain on the day, being down more than 20,000. I said, that's it. I'm going to, if I go there, I'm down. And I think I was at a point where I was like, well, I'm already down 16. I just got stubborn. And that, so that's also a reminder of that trigger. All right, once I'm down more than X amount, I'm much more susceptible to that negative sort of rationalizing that, oh, I'm already down this much, who cares? So I shouldn't even let myself go down that much in a perfect world. But today was a trade this morning where it was sort of bad luck and I got that big $18,000 loss and there just wasn't much I could, do to reduce that. It just was what it was. But my hope is that this inspires you by seeing that you're not alone in this. And that turning point for some people is just about having those red days where you give back a week of profit or a month of profit, just having them a little bit further apart. And that comes from having the discipline to know what is your A quality setup. Are you really trading it? Knowing when to walk away each day because your window of profitability is closing. Knowing that when you see a stock that's $80 a share, even if it's squeezing up a ton, it's too expensive. I shouldn't touch it. Knowing when you see a stock that's got a 50 million share float that I probably shouldn't trade. It's going to be choppy. And getting better at listening to that little voice that's saying, I should probably walk away. I probably shouldn't trade this. And today, that voice, I heard it and I ignored it. So I was already sort of past the point of no return in a sense where I was clearly already triggered enough where I was ignoring those instincts and that intuition because emotion was taking over. So these types of days are a great opportunity to journal and document what happened, where things went wrong, and what you could do differently next time. Now, fortunately, you already know what you're going to do for the next 5 days, the next 6 days, quarter size position, reducing the time that you're trading, and A quality setups. So that's the immediate sort of solution, just to put the guardrails on and dial things way down. But then there's that bigger question of what are my triggers and how can I get better at recognizing these types of days earlier in the day before the loss gets that big. And that those little subtle shifts can be the difference between success and failure, ultimately. That can be where you start to actually pull away. Because so many traders will go through these long periods of, 2 steps forward, 2 steps back. So it's like, a week of progress and then giving it all back. A week of progress, giving it all back. And you could do this all year long. You could do this for years and years. Now, for me, that's exactly, it was like this, but it was a little bit more extended over the course of like 2+ years. So the fact was, for me, the turning point was getting those days a little smaller. So when I would have the drawdown, I'd go to here and then I'd start to make a little progress. And yeah, I'd then give a lot of it back. And then starting to have those days a little bit further apart. So now I'm making a little bit more progress between these drawdowns, right? And all of a sudden, that's the difference between being here at the end of the year and being up here. This is 0. This could be, 10,000. Maybe eventually it's 100,000. Maybe eventually it's $1 million. So those are your turning points. So if this episode helps you find your turning point and find the realization of what you need to do differently in your trading, then it's worth it. So I put this out there. I put my losses out there. Is it embarrassing? Yeah, I'm embarrassed. I feel like an idiot. Today I was dumb. And look, hey, it is what it is. I'll own up to it. It was stupid. And I've got the $28,000 in losses that I've got to recover. And that'll be a reminder for the next few days that got to get back to basics, get focused. And you'll have that same experience in your trading. But my hope is that you're able to learn from the losses, that the losses become lessons. Because then, in that way, they're worth a whole lot more than however much it actually lost you. Because it empowers you to become a better trader, a more profitable trader, and long-term, that's going to mean a lot more money in your pocket. And in fact, my ability to have 76 consecutive green days in a row wouldn't have happened if it weren't for some of the losses I had last summer that triggered me to really do a deep dive into my metrics and what I'm doing right and what I'm doing wrong. So sometimes, these can be a real blessing in disguise. So thank you guys for tuning in today. If you're not already subscribed to the channel, I hope you hit that subscribe button. I hope you hit the thumbs up. And I'll remind you as always, trading is risky. You probably know that by now. My results aren't typical, so please manage your risk, take it slow. If you want to watch that interview with Jess, I'll put the link to it right here. Interview with Danny, I'll put a link right here. And I'll put another link to a full-length episode on technical analysis I think you guys will enjoy. As always, I will see you guys for the next upload real soon, and I'll be streaming bright and early tomorrow morning for members at Warrior Trading. Okay, see you guys in the morning.